It's been a tough few days for the pound, trading on the back of comments from Boris Johnson, which appeared to indicate that the UK is preparing for a possible no-deal Brexit. The UK Prime Minister, along with his counterpart over in Brussels, signalled that October 15th is the current deadline in order to get a deal over the line before the end of the year to ensure that the UK and the EU part terms amicably and with a deal in place. But that only leaves us a month, and neither side appears willing and prepared to compromise its position with regards to certain issues, most notably fishing and level playing field. Now, the impact that this has had on the pound has been quite significant. We've had 3 consecutive trading days now where the pound has been moving lower, quite considerable declines as well on a daily basis. It's not often that you see these 1% plus moves in these FX markets. So the fact that we've seen a couple of days of it now and could potentially be heading for a third is quite significant. Now, in terms of how much of a difference this actually makes in terms of the outcome, I'm still not too convinced, but it doesn't necessarily matter. This hard talk was always going to happen heading into the deadline. This is when people need to stamp their feet. This is when you try to draw compromise from the opposite side in order to get the best deal available on the table. We never see compromise at this time in the day. That always does come at the very last minute. And I think both sides are going to be counting on that heading into that October 15th deadline. But that doesn't mean that the markets won't be sensitive. We've seen over the course of the last 6 to 9 months, to an extent, the Brexit story has really taken a back seat. For obvious reasons, the pandemic has been a much more important issue and have been a much more important driver in these markets. But as we approach this deadline now, it does seem to be coming back to the fore, and that Brexit risk premium is suddenly being priced into the currency once again. As I say, there's still weeks of talks. We're seeing talks this week in London between the two ministers, David Frost and Michel Barnier. Hopefully, that will start to yield some form of good news. But I wouldn't expect too much at the end of this week. There's still a few more weeks to go, and I think that's towards the back end of that is when we're going to see any progress made. Ultimately, I do still believe common sense will prevail, and I've been wrong on this in the past, but we are still at a point when we're in the transition period. We haven't had no deal, so maybe my faith hasn't been entirely misplaced. I don't think either side wants to be dealing with a no-deal Brexit disruption for business in particular at a time of a global pandemic, and it's because of that I think there's going to be additional pressure on both sides to secure a deal and put their differences aside. But as far as the currency is concerned, volatility will remain until that day arrives. The pound has fallen, like I say, for 3 days now against the US dollar, breaking below 130 today. That's a key psychological barrier to the downside, which has now been taken out, moving us into a new area as far as these kind of trading ranges are concerned. If we look back at the chart, these trading ranges tend to be around the kind of 200 pip marks. So while we will see support and resistance in between, it seems to be that around these levels, 130, 128, 126 has historically been quite significant. The levels in between 127, 129 are obviously going to be levels that we are going to be watching quite closely. Even 128.50 at times has been a notable level of support as well. The only other thing I would highlight on the chart there is that speculative rising trend line. Only 2 points, so it's may not carry the weight that it otherwise typically would, but that seems to fall around the 128.50 to 129 marker as well. So we could potentially see that level be in an area where we see a bit of profit taking after the break of that 130 level, maybe following a retest of that 130 from the downside. Obviously, a rotation back off that 130 from below will act as confirmation of that initial breakout and could be quite a bearish signal. But I think the one thing that I would highlight is whichever way we do move with these markets, volatility is likely to be ramped up now in the next few weeks. And that is the one key takeaway that we should take from the last few days.